Hi, I'm Luke Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 5 minutes. Today, we're going to be talking about a beaten up athletic apparel brand that's on the cusp of a big rebound. The name Under Armour, ticker UAA. Now, Under Armour has not participated in the athletic apparel boom of the 2010s. Over the past 5 years, Nike stock has risen 100%, Adidas stock has risen 300%, Lululemon stock has risen 600%, and Under Armour stock has dropped 75%. It's gone the exact opposite direction. What's going on? After all, aren't athletic apparel sales booming? They are, but Under Armour completely missed the boat on the athleisure trend in the 2010s, fell behind the market, and in an attempt to catch up to the market, started flooding their product into lower price channels, hoping to increase brand reach. That didn't work. It just diluted brand equity. The brand lost momentum, it lost popularity, it lost favor, sales didn't go anywhere, profits got killed. Ugly, ugly, ugly situation. But guess what? Under Armour has fixed its problems, and in 2021, the company and the stock are due for monster years. Here's a deeper look at why. So, in order to understand why Under Armour is going to rebound big in 2021, we have to understand how Under Armour fell 75% over the past 5 years. It really all started in about 2015-16 when the athleisure trend, this sort of lifestyle athlete trend, was just starting to emerge. Nike, Adidas, Lululemon, they jumped on it. Under Armour said, no thanks, we're gonna double down on performance. We're not a lifestyle athlete, we're not an athleisure brand. And that was the wrong decision to make. The athleisure style, the athleisure wave really blew up, performance took a hit. So come 2016-17, Under Armour now is way behind Nike, Adidas, Lululemon. So in order to play catch up, Under Armour desperately decides to flood their product into lower price channels like Kohl's in order to increase brand reach. But it didn't do that. That only made matters worse. What it really did was dilute brand equity, because as soon as customers started seeing Under Armour clothes next to Tony Hawk clothes and Volcom clothes, they were like, no way. The kids were like, this stuff is not cool, it's not popular. The demand just fell off a cliff thereafter. Now, to make everything worse on top of all of that, Under Armour's athletes just lost relevance. Steph Curry, he was the NBA superstar Steph Curry. He was the face of Under Armour during the hot years in 2014-15, but he didn't even play in the 2019-20 NBA season because of an injury. Meanwhile, Tom Brady, the greatest quarterback of all time, arguably the greatest quarterback of all time, is now increasingly becoming an afterthought in the NFL. His signs of age are starting to show. Jordan Spieth, the golfer, he literally moved Under Armour's market cap by millions of dollars when he missed a putt in 2015. That's how valuable he was deemed by the market to the Under Armour brand. Has anybody mentioned Jordan Spieth in the past 2 to 3 years? The only articles you can find on him are how quickly this guy went from the top of the world in golf to almost irrelevant. So all of these headwinds converge and made Under Armour have a horrible 5-year stretch from 2015 to 2020. But COVID-19 has given management an opportunity to reset, and that's exactly what they've done. So Under Armour management finally figured out that, hey, we gotta stop selling into these lower price channels like Kohl's, because it really is just hurting our brand. So in 2020, during the COVID-19 pandemic, they had made a commitment to basically just clear inventory, push all that stuff into the lower price channels, clear it, get it out, rip the band-aid off so that we can start 2021 on a clean slate. And with that clean slate, Under Armour is now doubling down and emphasizing on a premium direct-to-consumer sales channel. And that includes opening up a bunch more branded owned stores. Nike's done this, had tremendous success. Lululemon, of course, their entire business model is built on DTC, and they've had great success doing that. Adidas has done it with great success. So Under Armour is taking a page out of the playbook of people who it's working for and just doing it for themselves. And I think it's gonna work really, really well because, again, they're clearing inventory in late 2020, so by 2021 they have a clean slate to execute on this roadmap. At At the same time, Curry, he's coming back for the 2021 NBA season, and his team is slotted in as the 4th favorite to win the 2021 NBA championship. So the spotlight's gonna be on him. A lot of consumers will be watching him play basketball next year. Meanwhile, Under Armour has also launched a new signature basketball shoe with NBA superstar Joel Embiid. That new shoe could sell pretty well in 2021 as well. So, next year, Under Armour is going to have a new strategy converging with new products, and that's a convergence that could spark an enormous turnaround in this company. Sales should rebound tremendously, margins should improve tremendously, profits should go from to way, way better. As all this happens, as this turnaround materializes, Under Armour stock could see prices closer to $20 by the end of next year. Well, that's all we have for this edition of Investor Plays Quick Picks. I hope you liked what you saw. If you did, please subscribe, hit that notification bell, smash the like button. And if you like to read, come over and visit us at investorplace.com. We have some of the market's best analysis. Until next time, cheers and happy investing to all.